Good afternoon, everyone. Thank you for joining the webinar, the Meristem webinar series titled Investment and My Generation. My name is Abisoye Oludipe. I work in Meristem Securities Limited as the Head Retail Services. Now with me, I have my colleague, Eniola Olabode. She's a senior analyst with, she's a senior research analyst with Meristem Securities Limited as well. Now, to kick off this conversation today, Meristem is the financial service conglomerate. We're capital market operators. And if you, for those of us that are aware of what capital market is, you're talking about long-term investment. So you have shares, and then we also deal in money market instruments as well. You can buy mutual funds, you can buy fixed deposits, we have dollar investment, trust services, loans and leasing. We also have a probate service, our registrars and probate service, which is located at 213 Abba Macaulay Way, Yaba. We're going to be and me that, late behaviors with different generations. So you see a certain person acting a certain way, they say, oh, she's acting like that because she's a millennial. See a certain person acting this way, and you really cannot, and they tell you, oh, it's because this particular person is a baby boomer. So part of the things that we're going to be discussing today is like to say, okay, you know what, we understand the different behavioral aspects when it comes to individuals and the different generations, but then let's bring it home to investments, because we look at investments and sometimes we look at it as, a big thing, but now we're trying to say, you know what, is it possible that the generation that you're born in affects the investments you go into? Does your generation also affect the kind of investments you take? Are we able to associate, risk to a certain generation? So are we also going to associate risk aversion to a certain generation? And now those are the things that we're going to be discussing here today. And like we know, like the banner says, we're going to be having Oluwatosin Olasende and Ugo Obi Chuku. I'm sure a lot of us have heard about Money Africa and Nairametrics. So we're going to be dealing with the founders of both financial services, of rather club or community builders, and then we're going to discuss some of these things with them. How has the investment space evolved over time, and how does it affect us as individuals? And okay, so now we're going to be asking ourselves, or rather, I'm going to be asking a few questions, and you can always, ask whatever you have at the moment, or based on the discussion I have, via the question, the chat box, and then I will be able to take it after. But now we all know that, when the pandemic kicked in 2019, I don't think that a lot of us realized that the impact it was going to have on us was going to be that of that magnitude. Now, in fact, when the lockdown in Nigeria started in March, me for one, I thought it was going to be probably for the first 6 weeks. I think that was the initial lockdown period. But then we saw that there was also an extension. Now, this extension did not just affect us as individuals. It affected us in different ways. That's why you hear a lot coming up. You also have people saying, oh, you know what, but it also affected employment. It also affected people's salaries. How exactly it's also affected the investment space. So is it that people that used to assets, did they then come back to say, you know what, with the uncertainty that is currently on ground, should I consider a safer asset, or should I continue investing in this risky asset? I mean, one of the first rule of a lot of people factor this in, or a lot of people say, with certainty on ground. In fact, I do not even want dollar investment. We're not even thinking of just for investing. We're thinking of, not just the now. We're thinking about children. We're also thinking of even generations that after them. So did the pandemic affect how people invest? Now, was it just, is it just about me? And then even the different generations that we have, how exactly did this also affect them? So it's safer to say that, a millennial might think of themselves right now because they do not have, responsibilities. But then you're thinking of the baby boomers, you're thinking of the Gen X, and then you're also asking, is that the same way that, they also thought, or they were able to marry the pandemic with their investment? And those are the things that we're going to be discussing today. So I'm going to be introducing our panelists. We have Oluwatosin Olasende. Oluwatosin has over 10 years experience working in diverse areas of the financial services sector. She has recently transitioned into building financial services products that empower people due to a strong motivation to drive positive impact in our society. Oluwatosin is the founder CEO of Money Africa, Nigeria's leading education technology platform that provides access to financial literacy and investment to a community of over 200,000 people. Learning the challenges and frustration of the average investor, she founded Lather in 2020 to facilitate easy access to high-yielding investment products. She has earned great honors for her past and recent works. Oluwatosin is a Washington Mandela Fellow, a LinkedIn Top Voice Finance and Economy 2020 Award winner, and a finalist for the Future Awards. She was selected as one of the top 100 women by the Leading Ladies Africa in 2019 and top 8 traders by CNBC Africa in 2012. Now we also have Ugo Dre, or rather Ugo Obichukwu, popularly known as Ugo Dre. Ugo Dre is the founder and partner at Nairametrics Financial Advocates, owner of nairametrics.com. Ugo Dre is a chartered accountant with over 18 years working experience. His work experience covers accounting, corporate finance, financial management, corporate strategy, business development, change management, and personal finance. You can follow Ugo on Twitter at Ugo Dre, and that would be UGODRE. All right, so you can see that with today's panelists, we're not here to joke at all. We're here to, we're here to give you the big guns. We're here to make you understand that, investment isn't just all about you. There are different factors that also, adds up to the way you think and the way you process, your investment plans and your investment options. And I'm sure that you're going to enjoy today's webinar session. Okay, so Eniola, over to you, please.
Okay, yeah, thank you very much, Bise, for that very in-depth introduction. So just like Bise said, today we'll be talking about investments and the different generations. We always hear we had several discussions about the different generations. Today we'll be bringing it home and relating it to investments. And just like Bise spoke about earlier, the pandemic has been a major factor regarding our investment decisions in recent time. At the onset, everybody was clueless. How will things turn out? What is going to become of our investments? But as things have progressed, as time has progressed, things have become a lot clearer. At the onset, we saw stocks backing remote work businesses, video conferencing and the likes. They gained traction. And further down the line, and even recently, there's been a lot of discussions surrounding different kind of investments, which we'll talk about later. So we've seen that maybe recently it appears that the risk appetite of some particular generation has gone off the roof. I won't put a label to it now, but some people in some generations, their risk appetite has like shot off the roof. So it appears as though they are like, okay, we've been through a pandemic. What's the worst that could happen, right? So today we want to break it down. What's the attitude of different investors to different investment options? And you would agree with me that as common and as popular as investment discussions are right now, there's some people who have zero clue as to how to even begin, as to how to get their head in the game. So I would like us to start with talking about our investment journey. How has it been like for you? How did you start? What introduced you to investment, and how did you begin? So Ugodre, I would like you to start and tell us how you started your journey in investments.
All right. Hi everyone. Thank you very much for having me on this event. It's always great to speak to an audience that is eager to invest or eager to pursue their financial goals, and also great to partner with Meristem. I actually use Meritrade for my everyday stock investing, so it's good to be on your platform. I hope you guys can hear me clearly. Can you hear me?
Yes, we can. Yes, we can.
Okay. All right, great. Also good to see Tosin as well. Tosin, hi, it's been a while. How you doing? All right, so how did I start my investment journey? Are you sure you want to hear this story?
Yeah, please spill the tea. We are here for you.
Okay. So investing for me started in, when I was in university, and at the time I was searching through some, books at home, some files, and then I came across annual reports. So back then they used to like post annual reports, to your house. We didn't have internet at that time, so like it was in the, mid 90s or late 90s. So I saw annual reports. I think it was Nigerian bureaus, and I said, there was one I saw, and then I saw my name on it. I'm like, why does this have my name? And then I saw dividend warrants. I saw my name again on it, and I saw some amounts on it. And immediately I thought of, one lumberjack shirt I was trying to buy back then to feel like Snoop Dogg, and I couldn't afford it. And here I was with a dividend warrant, and I thought that this was money. And then so I went to my parents, and I was like, what's this? Like, why is my name on this? Oh, my mom says, oh, this is it's an investment in your name. It's a shares that I bought for you, and this dividend warrant, you have to take it to a bank, and then they can pay you in cash. But unfortunately, you can't do that now. It's in my name, and this was back in the days where when they write your names, when they buy shares in your name, they kind of mix it up. It's not just your name. So it's your name and then your dad or your mom's name in between and all sorts of stuff. And so it was a huge problem for me because I just needed that money, what I mean? I couldn't get the money. And so I got interested in shares right away because I couldn't believe that, you could be part of something and then they post you like a check periodically. And then all you need to do is just take that check to the bank, and then, it's cash, and then you can use it for whatever you want. And so since I knew my parents had that kind of investment for me, I started tracking those checks. And I was always checking my, the mailbox so that I can get the annual reports and then the dividend warrants. I was more interested in the dividend warrants, by the way. And so that went on until I got into university, so I got out of school. And it was kind of like around the period where we were having the stock market boom. Sometimes it was at the beginning of the stock market boom, 2003-4. And that's when we were all investing in, so we got out of school and you started to feel like you were one smart investor. And back then we didn't have people like Tosin or anybody else who was trying to explain investing to you and stuff. You just felt like you were, you just reach that pour that, and all of a sudden, I can do this stuff now. So you're a sharp guy, and then you get all my alawi and all the salaries, my first salaries, then invest them, and then you expect that one day, when by the time you're 30 or by the time you're 35, you have so much money, and so that was kind of like my foray into investing for the first time, and it was interesting, at the time, and then we now started making a lot of money out of it, because that was when we had the stock market boom, 2004, 5, 6. Stock market was up, almost double digits at that point in time, and then had the crash of 2007, 8, and even 9, and so that crash actually was the beginning of my interest in personal finance and investor advocacy and investor education. And because at the time I had formed an investment club with some friends, and I was leading that investment club. This was like 2005, 6. And it was supposed to be a long-term investment club. And then we were buying a lot of shares. That was when they had a lot of IPOs and co. And we did a lot of investments then that we thought by now we would have reaped a lot of benefits. And unfortunately, there was no investor education. We didn't have platforms like this where you could learn how to invest and understand investing better. At that time, the only person you could listen to was your stockbroker. So it was whatever your stockbroker told you to buy, that you buy. So the stockbroker then will come to my house and will say, we're going to buy this stock. This one go move, or you go move. Buy it. No miss time, or you go move, or you go move. Or say, hey, how you go move? 20%, 2 weeks, guaranteed. We put our money there. And sometimes it works. And when it works, you're like, man, you're my guy. And then you go on and on and on. And we're all buying a bubble, but nobody knew. We didn't even know what the word bubble meant at the time. And then we went on and on and on. And then the crash happened. So after that, I kind of thought that, look, the lot of reasons why people got their fingers burnt was because there was no education. People didn't understand investment. We didn't even know what price to earnings ratio was. We didn't know what price to book ratio was. We didn't know what, the difference between valuing, a company using discounted cash flow or valuing just using peer-to-peer, valuation metrics. There was just nothing, So you weren't reading annual reports. You couldn't do financial analysis. You couldn't look at whether a company's profitability growth, matches his price to earnings, ratio. You couldn't, check whether the company was actually having cash on its balance sheet. Nothing. What you were just buying was just what people were, it was just a frenzy. And so that basically is my own journey into investment. And so I think it's been like 20 years of the bounce almost. So it's been an interesting journey. Yeah.
That's very interesting. Thank you very much. Tosin, could you just give us a little bit of, tell us how has it been for you with me?
Okay, so I got my first job at the age of 20, and then for the first 4 years of my career, I was living from hand to mouth. So I remember I moved back to Nigeria, and I was broke. Like, my mom actually squeezed 500 Nara into my hands in church, and this is after I'd seen good money. So I knew that I didn't want that to happen again. I wanted to learn for myself. And at that point, this was around 2014, 2013, there were not lots of platforms that were speaking simply about money. So I had to learn it myself, how to invest in the stock market, how to get a broker, how to apply for those things, just basically learning and investing. And that was my journey. So you made some mistakes, you had some highs, and it just got better as time went on. But that was just definitely how I, got into the investment space and had to start learning for myself.
Oh, interesting.
All right, that was really, really interesting. Okay, so I can see that if you look at Tosin and you look at Ugodre, you know that they're definitely from two different generations. Don't tell them I said that. Anyways, and you can see that their story is also different. Ugodre's story was basically, I was really, really interested in it. And then Tosin's story was, I've had my fingers burnt. I don't want to go through that again, and I don't want anyone else experiencing that. So now, Ugodre, I'd like to ask, how will you describe the different investment attitudes over the different generations?
Sorry, your mic is muted.
Okay.
Oh, sorry about that.
Let's just
Yeah,
break it down to Gen X, Millennial.
I know.
Gen
So
Z.
there's actually the baby boomers, which were people that were like, 60s. Then there's Gen X, 70s, which I think I belong to. Then there's Gen Y and there's Gen Z. So for the baby boomers, like my parents, their own attitude to investing was more like to invest for their children. They sort of like had that kind of attitude. And if you notice, a lot of our parents or grandparents had a lot of shares that they bought back then. And that was also because in the late 70s, there was this indigenization policy that the Obasanjo government kind of, put forward back then. And so then, there's this feeling of a nationalism that that they all had, and everybody just wanted to be a part of, the new economy and and all that. And so they kind of bought into Nigeria. That was the investment ethos of that era. And then it came to Gen X, which is my own generation. So ours was more of, we were that generation that started to learn about people like Warren Buffett early, started to read books that were inspiring, so books that sort of give you this rags to riches kind of mentality, and save, and like it was very like one-dimensional kind of thinking, and it wasn't really backed by a lot of experience. And back then, if you read books about investing, you wouldn't see any books that would tell you how to get up when you fail, or that when you invest, you can lose a lot of money. You ain't going to see any book like that. It was always like, just invest, you always win, you would always win. So it kind of like was that kind of approach. And that generation as well was kind of like very okay to take, limited kind of risk, because we were brought up to basically work, right? We always wanted to work. We weren't brought up to be very entrepreneurial. So it was more like it's either your parents were civil servants, or your parents, were working, for UAC or one of these conglomerates and stuff like that. And so you always wanted to be like your parents, and your parents are bringing you up to be a doctor, to be a lawyer, to be an accountant. So investing was basically one of those things you had to do as part of being, somebody who's just got out of school, somebody who's just started life. So you got to, invest, right? And then move to, Gen Y, which is the millennial generation. Their own investment approach was, I kind of often see the millennial generation as sort of like the lost generation when it comes to Nigeria, investing within Nigeria, because they came into, they came of age, the age of investing just about the same time when we had the dot-com bubble crash, the economic crisis of 2008 and 9, and then when the Nigerian stock market also crashed. So there was a lot of negativity around investing, particularly in Nigeria for a lot of them. And so for Gen Y, if you look back a bit, you find out that they kind of like they kind of prefer sometimes, Ponzi schemes, and not because they like Ponzi, but because it's just simple for them. And so it wasn't a generation where they needed to read some big book about investing maybe and trying to explain what to invest. And no, they just wanted something it's just simple. Tell me I put my money in here and then I make XYZ and then I leave. That's kind of like what that generation was about. And then the more recent Gen Z, I think they're the luckiest, because there's just a whole lot of things that they can invest in, and technology has really aided investment. So technology has democratized investment generally. So for them, their approach, if you notice, is they are very risk averse. They have very high risk appetite. They're always willing to, basically try anything out. They also are a generation that they go with the fad, like things that are in, they go with it. And they're also very quick to also air their opinion. So, in as much as you have that flock mentality, once you breach their trust, they're not going to go back to you. Right. So unlike my own generation, we kind of like, if you can just come back and massage those egos again, and then we'll come back and then we'll investigate. But for the Gen Z, you gotta always win their trust. Once they know that this is a winning asset or a winning vehicle or a winning investment or a winning partner, they're always gonna stick with you. You know what I mean? So that's like the investment attitude over the last over this generation, from my own perspective, though.
All right, thank you very much. Okay, just to reiterate, please, if you have any questions, please use the Q&A on the platform and not raise your hands, please. Okay, so Tosin, would you just like to tell us a bit of what you think, especially with Gen Z and the millennials?
Yeah, I think Gen Z and millennials are actually extremely curious, and it's a good thing. It's a good thing and a bad thing in the sense that they're very curious. They want to jump into it. They want to get right. They want to get started, as opposed to the other generation that might be very careful. I don't see a lot of carefulness. I see a lot of let's head in, which is good. Risk taking is good, but now the problem is having to now balance it. So whenever we're preaching investment to our generation, I think it's because look at MMM. MMM carted away with about 50 billion naira. So then giving the money is not the problem. And a lot of people talk about greed. And if we're keeping it 100, if you look at the way the returns that MMM or Ponzi schemes promise them, if they invest in the long run, they could also get those kind of returns. So lots of education is required. And also we can leverage on that weakness that could be, let's jump right head in. Let's just go in. Let's just go in. So how do we tilt that eagerness to just want to invest? How do we leverage it? How do we teach how to balance risk? Right? I think that's just really the weakness that we can leverage on for Gen Zs and millennials. I love the energy. I love the eagerness, but how do we balance it so that we actually win in the long run? And that's where we are now.
Okay, thank you very much, Tosin. Yes, and that's one of the things that, our generation also needs to understand. There's also a need for diversification. So I'm sure everybody can listen to how I'm using our generation. But, but I think diversification is also a very important tool that we also need to use when investing as, Gen Zs and millennials. Because what you realize is over time, yes, we tell you that, okay, we're still young and, we can take the risk now. And then, even if the risk, you need to understand that the risk should be commensurate to the returns. But even at that, even if you want to take out the risk now because you're still young and you feel like you can build it back, but remember that someone else that is also, taking a more informed decision will still have the funds there. And it means that the time when you're using to grow back this wealth, the person already has built it to an extent at the time and is even using that returns. And that's why you come about compounded interest, where even the returns that you have gotten so far is then gaining more interest to you. So in as much as you think that you're still young, you can take all the risk in the world, it's also very important that you also understand the dynamics of investing. So for example, if you want to trade in stocks, you also need to understand that, is it convenient for me? And that's why you have online platforms like Meristem that you can use, in trading stocks. And also in trading those stocks, you also need to understand what exactly is stock the best option for me? What exactly is my risk appetite? And it's very, very important. So the next question would be, are there generational based investments? Someone can tell us a short story. So I remember growing up, my grandpa, when we go there and then maybe you want to buy something and then you say, oh, grandpa, please money. He has a pocket inside his trouser. Like he's really opening, to bring out the money. And, at some point I was like, grandpa doesn't have money. But then when he died, I realized that he had shares. And I think at the time when they did the probate, which is basically the conversion of shares, is now dead to an estate account. Because if somebody you can't just say, oh, I'm a son, I want to sell the shares. You need letters of administration. You need to compile these documents together before they then turn it into an estate account, and then it gives those that the family have agreed as the administrators, except if there is now a will. But in case of my grandpa, okay, yes, I'm not sure if he had a will or not, but I know that they needed letters of administration, so which means that he died intestate. By the time when they sold the shares, I think the shares was about 16 million. And then I was looking like, how exactly did this old man, have such amount of shares? Like, this was somebody that would keep something, the money in a pocket that is inside the pockets. It was really complicated. So now this brings up the question: are there really generational based investments? Is it just about the now? Is it just about living for the present? Because I know that usually if you go on social media platforms, they just tell you live for yourself, you only live once and all that. But is that really it when it comes to investments? Is that supposed to be the thought? Are there generational investments? So you're not just thinking about the now, you're thinking about the future as well. You're thinking about your children, your children's children. So what do you think, Tosin?
I mean, if we're going to be honest, it's what it is. So for instance, I noticed that a lot of women from the North that come to Money Africa to ask us about investing, that's the first thing they ask us about. How do I invest in gold? Why? They probably saw their mothers, held a lot of their investment in gold. So it comes to it. So every time we're speaking about generation, let's not be in denial. It's what it is. So now, no matter how much you sell global shares or stocks or all these nice fancy products to my mother, she will not invest in an app. She wants to see a physical building. She's 62, is what it is. She wants to see a place she can go to touch, go in there and sign documents. So yes, there will always be generational. You see differences in generation and what they lean towards, what they gravitate towards. So what we're always thinking about is, how can we use their strength to our advantage, or how can we use their weaknesses and flip it around and turn it to a strength? But you're definitely spot on. Every generation have their own pattern, and it's not going to change overnight. It's something they've learned over time, something they believe in, and sometimes they even hand it over to their children. But yeah.
Thank you very much, Jose, for that. Ogodre, what do you think about, parents also opening trust funds for their children or for their grandchildren? Will you say that that also can be categorized under generational based investment?
Yes, very much so. I think that one of the things that we must always do as parents, and when I say parents, you don't even have to have had kid already, because of course, when maybe you're in your early 20s and you're looking forward to getting married and having a family, you can always even start to open up investments for unborn children. So generational wealth is wealth creation is very, very important. It's something that you can do through trust funds, like you've just mentioned. You can also do it through mutual funds as well. You can open mutual funds in the name of your child if you have a child. You can even do it through things like life assurances. So you have an investment in a life insurance investment where you put money in case maybe God forbid you're no longer here, and then that you've got people who depend on you. You're rest assured that you're covered no matter what happens to you. And I mean, we do know that we work very hard. Whether you're generation X, Y, Z, work is very tasking these days. Whether you're working from home or you're working on site, you put in a lot of hours, and anything can happen at any point in time. So you've got to also look at investments that you can do to ensure that you have your dependents are also very covered. And there are a array of investments that are like that. Some of the investments are maybe investing in stocks. Some can even be a bouquet. It can be a bouquet of stocks. It can be a bouquet of fixed income securities, right? And then all mixed up into it. It could even be commodities, just as Tosin said. Investing in gold these days is also very good. Guess what? You can even invest in wine. I have people who invest in wine these days. So they, buy wine and then they keep it. And then, over 10, 15 years, it has some value. Some people even invest in wristwatches. Some people invest in whiskey. So there are various things that you can actually invest in. Whether it's equities or commodities or fixed income securities. And then that you have someone's future secured. So yes, I think that is very important that people do this. One thing I like about a trust is that when you invest, using a trust as a vehicle, you shield the typical temptations that come with people basically, cashing in on an investment before it actually fully attains, the value that the original person who created an investment wanted to invest. So let's assume that, your parents wanted to invest in something that they thought should mature over like 10, 15 years, or because they want you to be at a certain age before you have access to that kind of investment. They just open a trust, and then you're the beneficiary of the trust, but you can't access that investment till you hit a certain age. So these things are also done just to ensure that you don't there's a lot of discipline around the kind of investments that have been left over for you. So that would be my approach. Different generations have different approaches to investing, but I think for what is right, we got to be able to access things like maybe a trust fund or a mutual fund or a dedicated investment vehicle for the people that you love. Yeah.
Oh, thank you very much. That's a very insightful answer. Okay, so as a follow-up to our questions so far, I belong to a particular generation and we like to enjoy ourselves. I'm not going to name it, I'm not going to put a label to it, but just take it that we enjoy ourselves. And as much as we want to save for the future, we want to ensure that today is protected. Our daily 2K is assured and protected. So, so there's something called financial freedom. We want to ensure that we associate wealth with freedom. We associate riches with freedom. I don't have to worry about tomorrow. I don't have to worry about an expense that is taken care of. So I'd like you to shed more light on what financial freedom is and how we can work towards attaining financial freedom. So simply, would you like to go first?
I really love that question. It's a very good one. So really, what is financial freedom? And the truth is, what financial freedom will mean to A is different from what it will mean to B. So I was asking myself, what does financial freedom mean to Oluwatosin? I think for me, it's number one, just being able to choose. Being able to choose is such a huge, it's a privilege. It's a big privilege. Being able to choose something like some people you want to work with, being able to choose that maybe I do not want to work anymore, or just the power of choice, right? And it's a huge privilege and it's a huge opportunity. So it depends from people to people, and then we also have to be deliberate about it. So in as much as we always like to preach about financial freedom, there's one thing we also should not leave out. We should let people know again and again that it is a long-term game, right? Financial freedom is a long-term game. It usually takes time. I think the media is always talking about, for instance, Florida Wave was valued at $1 billion, and then Paystack exited at $200 million. It's very rare. It happens to less than 1% of the people. Very, very rare. For a majority of the people, it's a long-term game. For a majority of the people, you have to compound over time. So in as much as I'm gravitating towards financial freedom, I also need to marry it to the decision that building that thing or achieving it is actually a long-term game. So yeah, that's what I say about financial freedom.
Well, thank you very much for that one. Yeah, Ubadri, you heard Tosin. She emphasized on patience. You have to play the long-term game. Some of us are not so patient. So are there any other shortcuts or anything you think we should know, any other factor that can contribute to helping us attain financial freedom?
Okay, I think that financial freedom is it's a goal, right? It's a destination. It's somewhere that you want to be in your life. And just as as Tosin said, you can define it, in any way you want to define it. But I think generally, financial freedom for me would be a number of things. And once you're able to determine what those things are, then the next question is, how do I get there? Right? So for me, financial freedom is one, no debt. Okay, so you don't have any debt, right? Financial freedom is you have your own house. So you're not, you're not living on a rented property. You're not paying rent. Financial freedom as well is that you have maybe a house in your village, right? If you're from the east, then it's important that you also have a house in your village, because that's also financial freedom. Now, financial freedom as well is that you have a job that pays you, that gives you a guaranteed income. Okay, and then you also have incremental income, which a lot of us like to call side hustle. So if you have something else that you're doing, that gives you that kind of buffer. So, and then lastly, financial freedom as well is that you have a guaranteed education for your education budget, or money, stashed away for your children's education. Once you can have all that wrapped up by the time you're, let's say, you know, 55 or 60, you have full financial freedom. Now, financial freedom also comes in different phases, right? So if you're in your 20s, you can't be, having maybe a trust fund, education trust fund for your kids might not be, one of those goals you want to achieve in your 20s as financial freedom. So financial freedom in your 20s, first of all, is that you want to have a good paid job. You want to have income that can take care of all your immediate needs at that point in time. So you're not depending on anybody to give you any money. You're not depending on your parents to give you money. You're not depending on your friends to give you money. And then you're also living within your means. So the money that you're earning is enough to take care of your means. So it's not like you are earning, 200,000 naira. You want to be living like some guy that's earning 1 million. That's not financial freedom. So you can see that it's also a mindset thing, right? So you can't just say, I'm earning. You can see some guy who is earning 200,000 naira, and he's attained financial freedom for that period in his life because he's not owing anyone. He's very satisfied with the way he's living. He can pay his rent without borrowing any money. He can buy clothes for himself. He can eat. And then you see another guy who earns 500K and he's nowhere close to financial freedom because he's burdened. He's owing everybody. He wants to wear expensive clothes. He wants to wear expensive wristwatches. He wants to buy the latest, maybe hairdo, that girls, everything. You just want to be all that. So there is no way that person can be in financial freedom. So, and I think how do you get there? You got to start with having a very strict budget, a budget that matches your lifestyle at the stage. You got to have a budget that matches your lifestyle, and you got to also have a very good investment and saving policy. When I use that word policy, not in terms of a very big word like here in government. Policy is for yourself. Everybody can have his own policy, right? So your own policy can be that every 200K I get, I've got to maybe put 25K in maybe some Meristem fund or investment asset, a vehicle out there, and just put it there. Just that's your discipline, and you know that you're putting it there because every year you're going to be getting 10% in return, and then in 10 years it's going to lead to X, Y, Z, right? So that is one way of getting there. Another way of getting there, of course, is aggressive investing, because when you're younger, you can invest more aggressively. So you want to also take some risk and invest in some very high risk, high reward or high yield assets. And then you invest aggressively and you know that money is coming in. You can also get there by also having, side hustles. What are you doing with your time? You go to work in the morning by 8, you're back by 5, you probably rest like 7, 8. What do you want to do in that evening? Do you have additional skills that you can also rely on to give you extra money, maybe on Freelancer, on Fiverr or whatever? Just, earn some additional income, So those for when you're within that age bracket, those are just some of the things that you can. And then when you're in your 30s as well, there are other things that you can do in your 40s. So at every point in time in your generational cycle, as you grow, you've got to always be in a state of financial freedom, right? So in your 20s, are you in a state of financial freedom in your 20s? In your 30s, are you in a state of financial freedom? In your 40s, in your 50s, in your 60s? In your 70s, for example, like my mother, her own state of financial freedom is she doesn't depend on anybody for any money. My mom can never call you and say, oh, can you give me, I don't have money to buy food, or give me 30K. No, rather, she would, at her own age now, still ask you, do you need any money? I mean, what else is financial freedom? So she's not rich. It's not like she's stupendously rich or has, but she's just comfortable with her life. She goes into her car, drives a car, goes to church, comes back. So you can't tell me that person hasn't attained financial freedom. So that's the concept of financial freedom. And that's how I think we should all approach it. Right.
That's very, very insightful. So it's something that we attain daily. It's not, as much as it is a goal, it is also specific to where we are at the moment. So in your 20s, you can attain financial freedom here and also still ensure that you're looking towards it even in your 70s. That's very interesting. So also, Tosin, I'd like to ask you this question. You deal with women a lot, of course, men too, but let's put a spotlight on women for a minute. Okay, so there appears to be like a gender gap when it comes to investing. Women want to, the average woman wants to, she tilts towards saving a lot more than she does towards investment. So is there a method to this attitude? Is there a reason women, of course, I know women like security in every aspect, not just money, not just investment. Women like security. And I'm not saying men don't, but we kind of like it a lot more. So is there a reason a women's attitude to investment is this way? And what can we do to get better, to open up towards investments? And of course, savings is good to save, but what can we do to also, open up to a lot more investment opportunities?
Great. I really love that question, and thank you so much for sharing it. So I've been very curious about this because I hear it a lot. Women are great savers, but they do not like to invest. But guess what I discovered? In actual fact, once women start investing, they're better investors than their counterparts, right? So what actually needs to happen here is more education, right? So we just need to do more education, ease them into it, let them know what their options are and all of that, right? So because at the end of the day, whenever everybody's really leaning towards safety, it's not a bad thing really, because the truth is it's like a spectrum. A lot of guys, sometimes they take too much risk and it could work to their advantage. Sometimes women take they take too much safety and it could also be to their disadvantage because they're not optimizing their portfolio. So once we start sharing education, once we start enlightening them, because they already understand the concept of safety, it's easier for them to have a balanced portfolio once they start taking risk, once they start investing. So they are perfect candidates. Have you ever spoken to doctors? They will tell you a particular person is a perfect candidate for a surgery because they have the right temperature, they have all of that. So because they've already harnessed the habit of saving, once we win them over, they are always fantastic investors. So we just need to keep doing the education. We need more poster childs. We need more people out there being like the face of, investing, and just basically, so it's easy for people to mirror something, so they can see that person there is really this stellar. And I don't know if you know Kathy Woods. I'm such a huge fan of her. She works with the ARKK Invest Funds. So we just need more poster childs, preaching the message, see people that look like them, that speak like them, and then we can be able to get more wins, switching them from just savings to actually investing. But once they start investing, they have better portfolios.
Wow. I'm empowered. I feel empowered already. I feel ready to take on the world. Yeah, I'm Googling. Let's hear from you. Is it the same for men too? Do you think that with education, with having people that they can relate to over there, you think men also? Well, I feel like it's different for men. I feel like men take a lot more risk compared to women. So what do you think is the difference when it comes to investment attitudes, and what do you think men in this generation and even other generations can do to get better at it?
I actually don't think that there is investing is gender based. I don't really think that maybe men invest in a certain way and women invest in a certain way. No, I don't think that. I don't think so, because from my experience, I've seen women who are incredible risk takers. You can't even don't even go there, right? So they take risk like crazy, and and when they calculate that risk, because it's not just blind risk, it's calculated risk, you'll be amazed. I've also seen men display similar characteristics. Then there are also men as well who are very, very conservative. They don't even take risk. If it's not treasury bills, nothing. Don't tell them. They don't even want to hear. It is not real estate where they see it. It is not an investment where they can touch. You know what I mean? So I don't think it's really about men or women. However, what differentiates a man and a woman is actually exposure. And that's because from this part of our world, men, early on, I love my exposed to investing. It's just a cultural thing, and it's really changing rapidly. So early on, the man is sort of brought up to, have an investment, and then the wife is brought up to just, maybe, either sitting at home, or the wife is making money, make money, and just use it to take care of yourself, or maybe your children, buy things for your kids, or buy things for yourself, or for your parents. So that's just a cultural thing. But now, like I said, it's changing rapidly. Men and women invest in all sorts of things. So if I'm going to look at it from a generation standpoint, men that are Generation X men will do stocks, right? They can invest in stocks. They love real estate investing, or Generation X. They love it a lot. In fact, that's like high up on their agenda. They do mutual funds as well. You're going to see a lot of men in their 40s or late 30s who have mutual funds. Rarely you see a guy who will not want to invest in a mutual fund, because he understands that they invest in treasury bills. They like to invest in dollar-based assets as well. They like to hold dollars and maybe trade them. If you go to Generation Y, they like forex trading. You see a lot of them, they love forex trading. They also like fixed income as well, maybe bonds or treasury bills. They can do that as well. They like mutual funds too. I've interacted with so many who have lots of mutual funds, either with Meristem or with the others. And then they interestingly also like to invest in education and immigration. So immigration is that they invest in what will take them out of this country. That's also some kind of investment, right? Yeah, you see a lot of them. So, and they're not stupid. They know what they're doing. So, they consistently invest in what takes them to, a different phase of their life. And, so they do that a lot. Now, you now come to the Generation Z, the younger ones. These are a lot more exposed and savvy investors, because they are futuristic. A lot of the things they invest in, Generation X doesn't even understand, right? So they understand what they invest in. They're good at they easily get swayed by things like cryptocurrency investing. They love it because that's what everybody around them is invested in. Forex related trading, they like that as well. Foreign stocks, they invest in that. They like things like that because a lot of the role models that they have today are not, are also people who invest, abroad. They also like commodities and a little bit of derivatives. So that's basically how, investment, flows to me across those generations. So it's not really, again, it's not really whether you're male or whether you're female. Yeah, I think we've got to understand that what the problem is exposure, right? So yeah, so the moment you're able to expose a female investor to investments, it's just incredible the kind of reaction you get. There's this lady I used to have from Port Harcourt. Then she started calling me when she started learning to invest in stocks, right? Then I started calling her to give me stock tips. I mean, that's just to show you how bad she's become. Like, she's gone so good, yeah, because she wasn't exposed to it, and then she just stumbled on I think one of my radio shows or something, and then that's it. So that's my approach. So we got to change that mindset. The women are very aggressive.
I think that also backs up what Tosin said earlier, that when women eventually get exposed, they're a lot more aggressive than men.
She's 100% correct.
A very interesting dynamic. Bisa, you're right. Over to you.
All right. So I like the fact that, at the end of the day, everything that Tosin and Ugodre have said basically points to the fact that, a certain level of exposure is needed, and that also guides the kind of investments that you also go in. But would you say that with the pandemic and the lockdown, investment decisions or investment channels, or the type of investment outlook that people have changed over time? So let's just say in the past 1 year, would you say that investment decisions or investment outlook have changed over time? Ugodre?
Oh, absolutely not. In fact, to the contrary, I think people are a lot more savvy about investing. It's kind of like the pandemic did directly opposite of what everybody thought that it would do. So if you look at it on surface, it kind of looks like people have basically been negatively affected by the pandemic in terms of investing. But no, that's not the case. Rather, I think people have suddenly just realized that what, you've got to have like a fallback. This thing that we've always preached about for years, people have now seen in reality. You got to have a fallback. There's got to be something else that you're doing. Your life can just change at any point in time, right? Oh, all of a sudden now I can work from home and don't have to go to the office. So this means I probably have more time to multitask. So it's not like there's one boss looking over me. So I can have my laptop here and I'm doing my office work, and I have another laptop here and I'm trading, or I can have my phone and I'm trading. I mean, so people have just been exposed to a whole lot of stuff. And I tell you for free, there are a lot of people that I know who are real estate developers. They pulled more funds last year than they have ever done in the last 5 years. It's just incredible. And this was between like June and September. They pulled more funds from people. And you know what? Not just locally, abroad as well. There's also a lot of Nigerians now living abroad who, because of the pandemic and because of the kind of stimulus packages that they received or savings that they made, they've also now realized that they gotta also have a very strong footing in Nigeria. And it's not just buying real estate, because before what they used to do is that you see them, they buy maybe a house. Now they've gone beyond that. You want to see them, they are investing in fixed income securities, they are buying Eurobonds, they are buying stocks, they are involved in agri-tech investments as well, they are doing crypto, they are even investing in startups too. So it's like that. And I think that it really took off last year. And when you hear news of people that have really, sort of quadrupled their money doing legitimate business, I think that's a good story. So for me, please, last year was the best thing that's happened to the world of investment in Nigeria. And I'm so glad that it's happening, because now everybody seems to want to invest. I'm sure Tosin gets that call a lot. What can I invest in? I have 1 million. What can I invest in? I'm like, you know what? I'm going to start charging for what can I invest in? Everyone can I invest in? Because everybody just wants to know what to invest in, and they don't get tired. It's the seeds, and you keep asking yourself, where is all this money coming from? And if you go and look at the CBN data, you find out that there's I think last time I checked, there's about 38 trillion out there in different kind of investment forms, and people are looking for where to put that money into. So institutional investors are looking for, they are ready to buy a lot more bonds, waiting for likes of maybe MTN and other blue chip companies to sell more bonds, because there's just a lot of money out there to be pulled. So I think that the pandemic, yes, it may have affected us, as a country, as an economy, but I think that in terms of investment, it's been more of a blessing, than anything else.
Okay, thank you very much for that. Tosin, do you have a different opinion to that?
I aligned with him. He said everything that he has to be said, but I think one thing I also want to highlight, for those that believe that there's an afterlife, you know how we always talk about rapture? And COVID-19 was like the rapture of the investment space. It was almost as though, how we always used to preach, when you retire, what is your retirement going to look like? And all of a sudden, some people were losing their jobs. It felt like the world was shut down, and it was like, oh my gosh, it was like an eye-opening revelation kind of thing. So we didn't have to paint a picture of what it would look like anymore. The picture was painted. So it was like a wake-up call. People started calling, oh my gosh, I wish I'd invested earlier. What if I lose my job? What if I don't have a source of income? What can I fall back on? And people started getting aggressive. You saw people downgrading their lifestyle in order to be able to balance. You see people becoming more aggressive, shifting their dollars, started making moves. So it was almost like a blessing in disguise. I understand that it was a bigger problem in the sense that, you know, people lost their lives amongst others. But if you look at the investment space, it was like an eye-opening revelation, for lack of better words. Yes, it worked positively in that space. We saw the highest requests ever. We saw the highest signups ever. So people just wanted to learn.
Okay.
Yeah.
I think that just reiterates the fact that, you know, investment isn't just about the now or the foreseeable future. It's actually you taking position because you're not really sure of what the future, you know, has to offer. But then you want to be sure that, you know, financially, you have that stability, you know, in the future compared to you, because it's easy to say, you know what, I have these funds now. I think investment is not about the amount you have now or the lifestyle that you're living now. It's actually you, you know, living that lifestyle for as long as you can, or, you know, maintaining that lifestyle. The pandemic was, you know, unforeseen, for example. And like you said, a lot of people had to downgrade their lifestyle. Some of them because they can, and some of them because they really did not have a choice. You know, some of them would have landed on the street if they maintained that same lifestyle now. And that's one of the reasons why investment is very, very important. And then when you're investing as well, it's really important for you to know, different things. What exactly is your risk appetite? What's your investment objective? Are you investing towards a certain goal? How long is it going to take? So those are the things that you need to understand when investing. Now, we have some questions, and I think we'll just take a couple of them, you know, before we continue the webinar. And apologies, the webinar was supposed to close at 4. Sorry, just give us a few more minutes, and I'm sure that we're all enjoying the conversation as well. Okay, so the first question from Imran: can I do stock brokerage as a full-time job? Justin, do you want to help with that?
What I'm hearing is, does he want to start a brokerage? Because it's not, it's quite capital intensive to start one. But what he might be trying to say is, can he be trading full-time? If that is what he's asking, yes, he can trade full-time. But if he wants, he can shed more light on that question. Yeah.
Okay. Thank you very much. Okay, we have another question from Godfrey, and that's what amount could be meaningful to start investment in the stock as your financial hub? Okay, so at Meristem, for example, we have an online platform called Meritrade. You can start trading with Meritrade with as low as 10,000 Naira. And that's because, you know, the market, compared to the fixed income market, where they tell you, oh, okay, your returns is maybe 5%. And you know that, you know, at the maturity of that investment, you're going to be getting 5%. The stock market is not like that. There's a certain level of volatility. So what you need to do is you test the waters first. You don't jump in. Even sometimes when you have investors that have, you know, the millions in their accounts and they want to buy a single stock, and they are wondering, why exactly aren't you using the entire funds, you know, to trade? There's also something called staggered investing, where they say, okay, you know what? I don't want my investment to pass this certain price. So how much am I going to get? So I think that if you're just going to be starting stock trading, you can start small and then progress that way. Now we have another question that says, what's the panelist opinion on various schemes claiming to be trading Forex and promising 20% monthly ROI? Ogo Drapes, can you help with that question, please?
I think that my view, I mean, this is laughing, I'm sure she knows my view about things like this. Look, when I hear, you know, an investment that promises you 20% and 25% every month or every quarter or whatever, I put on my Nike sneakers, wear my, you know, Adidas jacket and my Puma pants, and I take off, right? So please, you know, avoid investments like that. You know, online trading, whether it's stocks or whether it's Forex, is good, but don't give your money to platforms that just promise you returns that are just obnoxious. There's nobody that can, you know, promise you that kind of return without a caveat, except maybe you're not reading the fine print. Oftentimes when they tell you, you know, you're going to get 10% return, or I can beat the market, right? You know, very good fund managers will tell you things like, we can beat the market, and then they will show you their history. They'll tell you we've beaten the market maybe 10 out of 12 times or all the time in the last 10 years. And then the fine print to show you the risk that you could actually risk losing your money as well, part of your money. So, but when they promise you things like 25% or every 3 months, and you got to be very scared. So I don't subscribe to investments like that. I don't do them. So I don't advise people to do them. There are people who do them and who actually do win. By the way, there are people who make money doing stuff like that. But I don't do it. So I don't advise people to do what I don't do. I always whatever it is I tell you to do, I have a skin in that game. So that's my own philosophy. So that's my answer. Yeah, I'll take off.
Well, thank you very much for that question. So let me ask you this from Comfort. Comfort says, how do I choose ETFs and stocks to invest in? For long-term investments specifically, what should we look for? Not big name organizations. What should I be on the lookout for?
Okay, great. So for ETFs, I'm a big advocate for that, especially for people that do not yet have a full grasp of fundamental investing. It's like a cocktail. So in my cocktail, I could have bananas, watermelon, different things. That cocktail is tracking a couple of things, so it helps each other. So how do you choose what ETF to invest in? You have to look at diversification, right? So even though we are preaching that an ETF is diversified, some ETFs are actually very narrow. So for instance, an ETF could be tracking just tech stocks, right? So if you wanted diversification into other sectors, it actually defeats that purpose. So you're asking yourself, what kind of diversification do I want? Do I want a pie of different products in the tech space, or do I want a pie of products across the different sectors? That will be able to help you to choose, right? So if you're looking at the Nigerian stock market, you have the NSE 30. It tracks the 30 most capitalized stocks on the Nigerian Stock Exchange. If you're looking at the global market, you're looking at VU and a couple of others, right? Now, how do I choose a good company? There are 4 things we always talk about. Number 1, management. Management is very, very key. Who are the people back in that industry? What have they done? Go on Google, look them up, because you're investing first in the people before the product. Why is this very important? 2 people the same thing can happen to 2 different people, and the way they will bounce back will be different. You've heard a couple of companies that have gotten into trouble, and you'll be so surprised that they have bounced back. They fight back, they're resilient. It's that spirit, the spirit of resilience. How do I overcome the storm? So management is very important. What have they done in the past? How do they navigate troubles? Very important. Number 2, fundamental analysis. So numbers don't lie. You're looking at what is their numbers? What is the room for growth? Are you playing in a matured market space, right? You're talking about what space are they in? Is there a room for growth? What does the future look like? So fundamental analysis basically shows you what has happened in the past and also helps you with some kind of protection into the future. Another thing that you're also looking at is in terms of, I've spoken about, management, I've spoken about fundamental analysis, I've spoken about what could happen in the future. So those are like the 3 primary things that you're looking at when you actually choose a company. So yeah, guys, do not be afraid, counter the fear, dig into the numbers, look at the past, project what could happen in the future, and also look at the people that are holding the company together.
Thank you very much. Thank you very much. One more question for Ubodre. What is your view regarding investing in Eurobonds within the context of not wanting to leave money in Naira?
Fantastic. I think that I would always advise that you have a portfolio that is diverse. You don't want to have a monotonous portfolio. You have portfolio so when you have a portfolio that is, based on Nigerian stocks, that's Naira, fixed income like treasury bills or bonds, that's Naira. But then if you have Euro bonds, then that's dollars. So what that does for you is it hedges against things like exchange rate risk or devaluation. And devaluation occurs in Nigeria every maybe 2 to 3 years. And if you analyze it, it comes about 4 or 5% or so annually. So if you have a good chunk of your portfolio in dollars, then that's great. Now, but you gotta also be mindful that for you to have a portfolio that has a dollar component like a Eurobond or US stocks, it means that you would have to have dollars. So it is either you're buying the dollars at the black market or you're earning dollars. My own preference is that you earn dollars, right? people often ask me, but how now? They pay me salary in Naira and things. So I think that, as Nigerians, we've got to find ways of actually earning money in dollars, because we can't all be taking Naira and converting to dollar and expect the exchange rate to remain the same. It's not going to happen. So you got to be able to find ways of earning dollars, from here, and mostly through your skill. So if you're an accountant or a lawyer or you're an investment advisor or whatever it is you do, and you can offer some kind of services online, I think that you can earn money in dollars. It's not that difficult to open a PayPal account, or even I think is it Paystack or Flutterwave. One of them just recently signed a deal with PayPal, so you can also earn dollars. So when you earn those dollars, or you have dollars in your account, rather than just keep them idle, except maybe you have something important to do with it, you just move them into a Eurobond, and I think you can buy Eurobond through platforms like Meristem as well. And then you buy your Eurobond, and then you know that it's there for you. And trust me, it's possible to keep. I think I would say at least 20%, if you can, of your portfolio in Eurobonds. It's really a very good hedge. Because when the Naira, so the difference between the Naira investment and the Eurobond is that Naira investment typically come with a higher return. The return is much higher, oftentimes in double digits. Why Eurobond is usually like 6-7%, right? But the upside the Eurobond gives you is that it's a good preservation for your portfolio, and it helps with normalize portfolio volatility that you have with Naira assets. So if you can keep 15-20% of your money in your Eurobond, and that's fantastic. Yeah.
Interesting. Thank you very much. Someone is asking, does Meristem have an investment platform? And if you do, what are they, and which do you advise? For this question quickly, I'll say you go to your Play Store or your App Store and type Meri Trade. So it's an application where you can trade stocks. If you have any other questions, you can drop it in the chat box on the application. Someone will reach out to you. Tosin, someone is asking, do you think it is okay to save up for emergency funds first before you start investing?
It's very important. Let me tell you why it's very important, right? If you do not have an emergency fund, you screw up your investment portfolio. Let me give you a fantastic example. So there was a time GTB was trading for as high as 13 Naira thereabout. Then COVID happened. It went all the way to 16 Naira. You didn't have an emergency fund. You lost your job. You needed to pay rent. What do you need to do? Oh, boom, I'm going to sell my GTB shares. Now you sell it at 16 Naira. You lost half of your investment because you had nothing to fall back on, right? So emergency fund is very important because you keep shaking the bag. You won't let the bag actually set. You won't let the bag form and come together because you always go and dip into it because you have no emergency fund. Another reason why it's very important to have one before you actually start investing is because also it's cheaper for you, right? Because if you don't have an emergency fund, you started investing, you can't break that investment to quickly access quick cash. You're most likely going to have to borrow. Now, if you don't have access to the commercial banks that actually offering like the cheapest form of debt in Nigeria, you're most likely going to go to a microfinance that is relatively expensive. So we always say, try and be your own bank by having your little emergency fund. And then also, you don't have to disrupt your long-term investment because you're trying to quickly cash in. So yes, I'm team investment emergency fund before you actually start investing.
Okay, thank you very much. Bisoy, are you there? Would you like to take over from here?
Okay, yes, I will. Okay, so we have another question that says, for the risk-averse person in the diaspora, what can you say about how to look at investment in Nigeria with some level of confidence? Now, if you're in the diaspora, I do not think that me saying, you know what, to go with this firm is going to be the best decision. But I think that what I would advise you to do is you also need to do your due diligence. So for example, Meristem has been in existence for over 16 years. Now, what you need to do is when you're doing your due diligence, you also need to understand the products that you're investing in, because another thing that we've seen is some clients will come in and say, you know, they want to buy shares, for example, and then you bought maybe GT at 29 Naira, and by tomorrow you're seeing that it's at 27 Naira, and you know, you start hearing things like I've been scammed. So the first thing is, whatever firm that you're going to be investing in, you need to do your due diligence with the firm. And one leg of due diligence is, are they registered or regulated? So for example, the apex regulator for capital market operators in Nigeria is SEC. Are they regulated by SEC? If they are. Now, there are also cooperative societies. You would also want to confirm, do they have a trust that also, does a second level check to confirm whether, everything they have promised their investors is in place or in shape? If that is in check. So those are the things that you need to look out for when you want to invest in Nigeria, because I know a lot of people in diaspora have lost their trust in Nigerian investment companies. But if you do your due diligence properly, I can assure you that you would be fine. In fact, Meristem, we have products that are also suited for clients in diaspora. So you can always reach out to us on contact@meristem.ng or 0700 Meristem with what your inquiry is, and then would give you would be able to attend to you, probably a tailored product or so. Now, as financial advisors and with the different generations, so we're asking ourselves, what exactly are the peculiarities that we have for these different generations, in order for it to be a win-win for them or for different generations, and for it to be a win-win for us as well as a financial firm, because the only reason why we're in business is because of our customers. I want to be sure that at every point in time, we're delivering princely service to our clients. Now at Meristem, we have different products that ranges from stockbroking to trust services, because I can see that someone had a question about, opening a trust account. Yes, you can. You can have a will, you can have a trust fund. So whichever it is you want, you can just reach out to us. And some of these products are actually very, very, they're tailored, or they can be tailored towards your needs. So you can reach out to us at contact@meristemng.com or 0700 Meristem, and you'll be attended to. Now we might not be able to take all the questions today, but I can assure you that whatever questions you have, you will definitely get a response from us. Now we have another question that says, what's the minimum I can use to invest in Meristem, and what's the rate of return? Now, depending on the investment that you would like to do with Meristem. So for example, if it is equities, you can start with as little as 5,000, 10,000 Naira. There's no fixed rate of return as regards that. Now, we also have the fixed tip, where depending on the amount and the tenor that you're going for, you also have that. So if you send us an email, we can always send you what the rate guide is at that point in time. So you can also invest in mutual funds, which you can start with as little as 10,000 Naira, and then you'll be getting a net return of about 3% on it. And then we also have the equity mutual fund. So for example, I'm not sure if everybody understands what a mutual fund is. Basically a pooled investment. So you're not the only one investing. It's like pulling funds from A, B, C, D, and a fund manager then manages the fund, which means the fund manager is a professional managing that particular fund. So for example, if you think, oh, the equities market, I don't have the time, or I really don't think that I'm very good at stock selection, you can actually start with the mutual fund, or you can start with the ETF as well. The ETF, in fact, the ETF tells you what exactly the fund is being invested in, and then it is passively managed. So you're sure that, transaction cost is also at the minimal. So for example, we have the Meristem Growth Fund, we have the Meristem Value Fund. Based on the name, you already know what. So the Meristem Growth Fund ETF is invested in growth stocks. Now the Value ETF is also invested in value stocks. And then if you go on the Nigerian Stock Exchange, you would see the constituents of these different funds, and that would also guide you. So there's also a level of transparency as well when it comes to different products that are listed on the Nigerian Stock Exchange. So you can decide, do I want a product that is tailored within the firm, or do I want a product that is publicly listed? And that's why you have equities, you have bonds, you have the ETF as well. Now, a lot of people would say that if you're going to be investing in the federal government bond, it's for the affluent. But I think federal government also has it covered, and that's why they introduced the federal government savings bond, which you can also buy through Meristem. You can start with as little as 5,000 Naira with a minimum duration of 2 years and the maximum duration of 3 years. So compared to you buying the federal government bond directly with 50 million 1,000, you can start buying the federal government savings bond with a minimum of 5,000 Naira on a monthly basis. And like I said earlier, there's something called the compounding interest. You might want to get on the bandwagon, which is the best way to actually invest currently. All right, thank you very much, Ugodre and Tosin. We will not be able to take all the questions currently, but I'm sure that we would answer the questions. Thank you very much for joining today's webinar.
Thank you very much. My pleasure.
Thank you for having me. I enjoyed it.
Thank you very much. And to everyone, if you have any question or you sent a question and it wasn't answered, please send the question to contact@meristemng.com. You'll surely get a feedback. Thank you very much, everybody. Have a wonderful evening.
Okay, so for Amina Ali, the email is contact@meristemng.com, contact@meristem, meristem.com.